there are hundreds and thousands and probably millions of different paths your portfolio could take over the next 30 years. And if we can run, 10,000 paths, we can sort of evaluate out of all those possibilities, are we still comfortable with this plan? And if we say yes, then whatever might happen this year is probably contained, or something similar to that is contained in those Monte Carlo simulations already. So we've already stress tested this portfolio. We've already shocked it with inflation. We've already looked at what if the market's down 20%. So we've already accepted the possibility that something like that could happen and still get you to where you need to be in the end.
Absolutely. And I would say start looking at things in a little bit in a more positive way. So example, there might be absolutely crashes ahead, and maybe some of your favorites will hit a pretty low mark. Well, wouldn't that be a great time to pick up the phone and say, hey, I want to convert some of those shares to a Roth, because now that at a discount, I believe in them on the long term, but on the short term, let me take advantage of some Roth conversions. So that's why, again, a planning takes into aspect everything else, tax planning that goes with it as well. It's not just about the investments.
So let me say something here. I mean, it's probably worth our time to reiterate some of the core philosophy that we apply in terms of how we help our clients achieve a better result. So there's two things going on here. There is the growth in the portfolio, of course, through whether you're doing it through investment vehicles that we choose. And then there is the strategies that we use to help the client achieve growth through whether taxation strategies, whether it's estate planning strategies, things that could create a yield for the portfolio in the long term, of course. All these things, and Crystal, you just talked about Roth, for example. Roth conversion is only one of the strategies we use to sort of create some sort of an arbitrage in clients' results over a long period of time. Some of it is based on projections. Some of it is based on immediate things that we can take advantage of. But the implementation of advanced solutions and strategies in a client's portfolio is one of the key things that we do very well in here. And I would not say I'd say you guys do in here, because you're the front line doing the work in terms of finding out what is it in one's best interest as far as, say, just certain tax strategy or certain estate planning strategy or charitable strategy, or whether it's relating to their health financial planning or any other area in their life that could create a benefit in terms of growing their assets. It's a long game that confidence applies in the strategies that it uses, which is how can we mitigate the risk? Simultaneously, how we could make sure that the wealth or the assets that you have are maximized with accordance with the current laws and opportunities that are available in the economic environment that we're in.
Those are some great points. And I have to echo Crystal. I mean, market downturns or negative news can present opportunities for us, right? It's not all a negative thing. Trying to keep that positive attitude, I think, is fantastic advice. And, when these things happen, it's not all bad. There's opportunities to improve probabilities and such, especially since we've already done, as Chris had mentioned, the Monte Carlos and stress tested these things. So we're comfortable with the downside of the portfolio, and we may actually have an opportunity to add some value in those scenarios, whether it be Roth conversions or other tax strategies or looking at estate plans in certain ways. So there's never a time where we don't want to look at what strategies are able to help us maximize this. And sometimes the negative events are some of the best times to do these things. So there's always something we could try to think of, right? It might not always work, but we could always look at the scenario and see if it's going to fit.
And that's what I think the excitement in the work that you do is that you're always looking for something. You're always looking for what could be an opportunity that we can take advantage of for the sake of the client. I mean, simple case in point. You see business owners, for example. If you're a business owner, there are strategies sometimes to protect your business from being sort of going wholesale if something is to happen to you and your heir losing on the entire value of what you built throughout a lifetime. That in many, many cases could be significant amount of money. It could be even in the millions of dollars in some instances where people would lose because they haven't done the proper planning when it comes to structuring their financial situation so that they would not have those issues. There are a number of strategies we can implement to help a business owner, for example, protect that asset that they built over the years and not have, say, most of it go to taxes if something's to happen to them. Or if they're selling it, perhaps lower the tax basis on it. For people that have assets in a different way, not necessarily from business, there are a number of strategies, whether using charitable funds or certain kind of strategies that will help them with their taxes and give them what they want in terms of the philanthropy, but yet at the same time get those tax benefits that could help other part of their financial situation.
No, I think you're 100% correct. No matter what situation that whether you are a business owner, you're just a personal investor, right? However you have your assets, again, there are strategies you can employ. Looking at, and again, it's not just the investments. It's just a small piece of the pie, really. When you look at all of the different places that we can look at where you can add value, we mentioned taxes and estate planning, but is there education planning that we need to do around this? Insurance planning, not just, life insurance, but everything. Are you fully covered? Are there ways we can produce income in future years and boost that up in a certain situation? So there's so many different avenues that we can go to that it just should all be considered. And again, back to the point that negative news isn't necessarily a negative thing, right? There are opportunities, whether it's a business or personal. There's almost always something to at least consider and see if it makes sense in this specific year. And a lot of you have gone through some of the tax plannings with us where we look at those different strategies on a year over year basis. And sometimes we're looking sooner than later based on what's going on in the market, right? So we're constantly in motion, right? We don't know what the future is going to hold, but we work with what we know and we try to plan around that with our best assumptions and thoughts that we can for the future. And again, that comes down to why we stress test these and why we run the Monte Carlos, because nobody knows the future. There is no, some of you have heard me say this before. There is no such thing as 100% in financial planning, right? If you're getting to even, the high 90s there, you're in a really good spot because absolutely nobody knows the future. So we work with the now and what we know, and the strategies that we know will add some value for you.
I said, I get you there, James, in the most boring way possible, right?
Exactly. Right. We don't want all the ups and downs of all that, right? We want it to be kind of a steady way to get you from A to B, whatever B is, whatever those goals are.
And this is the thing that excites me about the firm on a daily basis, the sheer amount of strategies that the firm is always looking for higher and better than most, in my opinion, advisors out there do, which is just an investment piece of it. There are so many strategies. You look at it from tax-free strategies, as we said, to business strategies, to other types that are really have helped a lot of our clients in ways that are, I've seen it. It's pretty incredible as to how effective they can be for the right person.
You guys remember when we used to be able to do tax loss harvesting? Remember that strategy that we haven't been able to do for a long time because the market's been at all-time highs for several years, but I think that's a great example. People forget that, when there's a downturn, it's a good opportunity to harvest some losses. Even more importantly, a lot of clients are, pushing back against making any changes because of potential tax implications, right? So they think about, I don't want to sell this because I have to pay taxes on the gains. Well, sometimes when the market pulls back a little, you can take some losses, reevaluate, your holdings and get into those positions that you think are really well structured for the next few years, as opposed to just staying with what you've been in because of, the embedded gains.
It's always thinking outside the box, right? Because I remember having a meeting with someone who was very, very heavy in one stock and they just wanted to diversify, but they were having a hard time diversifying because they were going to be selling at a very high. And all this time, they're also donating a good chunk every year to their church. So we came up with a solution, but wouldn't it be a lot better if we just took a lot of these stocks that you don't want and put it in the next few years in a donor advisory trust fund? That therefore supplements, all these other years worth of donations that you were going to do. That immediately allowed them to diversify what they wanted because now they had the cash on hand that they normally would give away, that they could invest in what they wanted to. And they were able to give a big chunk of what they were heavy into those donor advisory trust funds. So then they can diversify however way they want for that different charities that they're going to donate to. And it was those thinking outside the box that even I know their CPAs well, why didn't we think about this? And they were super excited when we got together and came up with this solution. And it was all about, it didn't matter what was going on at the time. There's always some sort of a solution we can address, whether the market is up on something that you're trying to diversify on, or the market is down on some of your favorites. And really the key, I would say, is take everything with a grain of salt when you're reading the news. When you're getting those headlines, that's the big thing. And remember, that's what you have us here for. If you want to brainstorm some things, if you're worried about something, sometimes it's okay. Just call your team, have a conversation. Don't go to sleep at night stressed for no reason. That's the whole point. We want you to be worry-free, knowing you have a good, solid plan in place. Now, for those of you who don't have a good, solid plan in place, then I'm going to tell you, yes, start thinking about that, because I can't tell you to sleep at night not worrying, because when you don't have a plan in place, you don't. And I don't want you to be making the wrong decisions. So that's why, again, getting a solid plan in place is the key.
So that's been very interesting. I like the conversation. It's great. It's really motivating as far as I'm concerned, as to see how the plans are and how we've done this. Any final words? Let's start with Chris.
I think the name of the game this year is going to be volatility. Federal Reserve is going to hike interest rates some number of times, 2, 3, 4 times. They're going to be doing some other programs. The market's going to go up. The market's going to go down on a daily basis, on a weekly basis. As rates go higher, as inflation numbers come in, all those professional traders, the hedge funds, the asset managers, they're going to be reevaluating all of their investments. And that's going to drive prices up and down, probably through all 12 months this year. So there's going to be good weeks, good months, good quarters. There's going to be down weeks, months, quarters. So don't get caught up in that daily headlines, right? We know when the market's up, market soars. That's the headline. Market's crashing. It could be down 4 or 5%, right? Those are pretty normal days over the last 30 years. It just feels so much more intense now that we're bombarded with headlines, constantly in our hands with our phones.
Yeah, so great points, Chris. And those headlines can certainly lead us in certain directions. But again, it comes back to the plan. Those of you that are already working with us, we've run those plans, and at all of our annual reviews, remember, we go back through, confirm, rerun those scenarios, and make sure that you're on track. For those of you that don't have a plan or don't have a plan with us, I would encourage you to continue going through the meeting process, planning process with us, or to reach back out if we've disconnected. So I think it's paramount to have a plan in place. And as Chris said, there's going to be volatility. That's why diversification, having that plan in place, is so important, so that we're not having to worry about all of those headlines that we do here.
And I would say, following both Chris and James, is keep your emotions under check. Don't make emotional decisions. And, if you're a Star Trek fan like me, follow Spock's word of wisdom, which is be logical. And if you're logical about your decision, then you'll be on the right track.
And live long and prosper.
And live long and prosper. Absolutely. Can't do that though, quite. I don't know, James, can you do that?
There was an expert.
That was a great one.
Yeah.
So again, just one more thing before we hop off. So if you are a friend of or family or colleague of one of our clients and you're watching this and you don't have a plan in place, feel free to reach out to us and we'll be happy to go ahead and do a complimentary session and just see how on track you are. And clients, if you need to have a meeting with your team and you want to just make sure all the T's are crossed and all the I's are dotted, just so you can feel more confident, we're always here for you as well. So until next time.